Hello, everyone, and welcome to today's virtual event. My name is Joshua Mintz, and I am a director at S&P Global Market Intelligence. Ahead of today's distinguished panel, I'd like to kick things off with a data-driven market viewpoint of the themes to be discussed. To start, this slide provides a view into private investment activity from both strategic and financial investors for the health and wellness space here in Asia Pacific. To help illustrate this broad market, we've taken 6 themes at the top of the slide of better health, fitness, appearance, mindfulness, nutrition, and sleep, identified by a recent McKinsey consumer survey, and applied those to our transaction database by mapping them to our healthcare industry classifications, topic tags, business descriptions, as well as Crunchbase categories. Looking towards the aggregate transactions chart at the middle left of the slide, we can see relatively flat movement from 2017 to 2020 in terms of deal counts. But that was followed by a substantial jump in 2021 to increase the number of transactions to 26%. But the real story is when we shift our attention to the aggregate transactions value chart on the right-hand side of the page, where we see a growth from a 2019 value of $5.5 billion to a total value of $16.7 billion in 2021. And again, this is for deals targeting companies here in Asia Pacific alone. Of particular note here is the growth of the better health space, denoted in the dark blue, which accounts for such items as mobile health apps, wearable health trackers, health diagnostics, and so forth. And this space has grown to $11.6 billion in 2021. And so this really great story about the growth in capital nicely transitions to our set of charts at the bottom of the page. These depict the percentage of deals with private equity backers, with deals with PE involvement denoted by the dark gray portions of the pie chart. And so here we can see in 2017, about 1/3 of all deals had PE sponsors. And that percentage increased to nearly 50% by 2019. And when we look towards 2021, we can see that PE sponsors back nearly 2/3 of all deals in this space at that point in time. So this really shows the strong private market's desire to continue to support the growth of companies within this space. And so moving to the next slide, here we're drilling into artificial intelligence companies in the healthcare space, but we're expanding our scope to include global players. The top of the slide represents a timeline of artificial intelligence companies in the healthcare space conducting IPOs over the last 5 years, with APAC companies denoted by the orange callouts, EMEA by the red, and North America by the dark gray. And again, we've identified this universe from a combination of our industry classifications, business descriptions, top tags, and Crunchbase categories. Looking at the timeline, what we see is a really great uptick in the number of AI healthcare companies going public in 2021. And this is notable not just because of the number of deals, but because of the amount raised, with several deals raising $200 million plus and one deal raising over $600 million. And so transitioning to the bottom left of the slide, here we have broker recommendations for the larger universe of global AI healthcare companies that we have identified. And again, this includes companies that have IPO'd prior to 2017. Each line here represents an individual company and its associated broker recommendations. Dark green lines represent buy recommendations, light green as outperform, and yellow as hold. The circle marker represents the day close price as of Tuesday, January 11th, last week, and the triangle represents the target price. The line between them represents the potential price upside. And so looking at the chart, we can see the quite positive views of the brokers, with the majority of these AI healthcare companies having buy or outperform recommendations. And they also have substantial potential upside for many of them. To provide a benchmark, we've also included a distribution of all healthcare companies with their associated broker recommendations on the right-hand side of the slide. And again, here we can see the generally positive views of the industry. And so looking towards nutrition and specifically protein, this next slide takes into account trade shipment data from our Panjiva data set, and it provides important context of the growing demand for protein and sets the stage well for our next slide on alternative proteins. For illustrative purposes, we look at the customs export data of 3 major meat producers, being the United States, Brazil, and Mexico, and examine the flow of those products into 5 major markets here in Asia of China, Japan, South Korea, Hong Kong, and Singapore. Looking at the data in aggregate, meat exports from these producers have grown to these markets from nearly 1.2 billion kilograms in 2017 to nearly 2.2 billion kilograms in 2021. Of particular note are exports to China during these times, where they have grown from nearly 200 million kilograms in 2017 to nearly over 1 billion in 2021. Though some of this may represent a redistribution from other meat-producing markets. And so over time, we see that the strong demand for protein really speaks to the longer-term potential for alternative proteins, as consumers potentially shift their preferences to take into account the environmental, ethical, and nutritional value of alternative proteins. And that transitions us nicely to our last slide. It's a very positive story of the growing interest and investments into the alternative protein space globally. And this slide takes into account a universe of plant-based, insect-based, microprotein, as well as cultured meat. The top of the slide here looks at public and private market investments into the alternative protein space, with the color coding indicating the type of investments. IPOs and follow-on equity raises are captured in the rightmost columns in dark blue. And so what we see here is a nice ramp up, especially in 2021 across multiple channels, including venture in pink, growth in yellow, and public equity, which is again denoted by the dark blue lines. And so shifting gears, if we transition to the bottom chart and look to the dark blue color line in the middle, that represents an equally weighted index that we calculated of publicly listed companies in the alternative protein space. Note that it's only 10 companies in the index so far, so individual companies may have a large impact on the picture here. That's especially true if we look to the bottom red and green bar charts that represent quarterly revenue surprises, positive represented by green, negative by red, against analyst estimates. And this is as it's still early days and only a small subset of this listed universe have analyst coverage. The index chart itself, though, really looks quite remarkable. A run up by over 9 times by early 2021, though that has since pulled back to just over 2x by year end. And if you look at the analyst surprises, early on, we saw this reflect a high-profile IPO and revenue growth driven by capacity expansions. More recently, with the negative surprises, we're seeing the impact of a more competitive landscape and some reset of expectations on the market rate of adoption. Again, this is for illustrative purposes only. It's early days and reflects only a small universe of companies. And we should continue to expect a lot of volatility, both in terms of business growth and financial market performance, but certainly it indicates a level of excitement backing the longer-term secular trend towards alternative proteins. With that, I'm happy to turn things over to this great group of panelists and moderators. Thank you.